Hi everyone, hope you're all doing well, and today I'm talking about the 3 UK stocks that I bought this week. Most of these stocks came from a dip because of the new strain of virus that came out with the coronavirus, and because of that I ended up with a lot of countries shutting the borders down, and there's a lot of panic out there. And just as the weekend went on, basically more and more countries were banning UK travel, and then it was like building the pressure on the UK side of it, and obviously the UK stock market took a tumble off it. So I took that opportunity to go buy some of my companies that were on a bit of a discount, and I'll go through the 3 that I did buy. Now, the ironic thing is that when the UK discovered the new strain of virus that did come out, it was quite funny how the other countries were so quick to shut down the UK. But when we take that back into March time, if that same thing was put in that sort of time, it would have been a lot better, and we probably wouldn't be in this situation. And as well as that, the thing is with the UK discovering this new strain of virus, it's more than likely probably already spread to these other countries. So it is a bit too late to kind of discover it because it's probably gone out there. But hey, you've got to look back on it and think it's a bit of a funny situation, really. But yeah, we're going to look at the 3 companies that I did buy this week. I also did buy a US company. I'll probably talk about that in a few days' time. I'm trying to build up my position a little bit before I do reveal that one, because last time I revealed Tattoo Chef quite early, the stock ended up going up quite a lot after that video. So yeah, I'm going to probably reveal that in a few days' time. But if you want to know when I am buying and when I'm selling companies, and also the new US company that I'm buying, join my Patrons group, the link is in the description. But smash the like button and we'll take a look at the 3 UK stocks that I bought this week. So just an honourable mention for Airtel Africa. I was very close to adding more shares into this one, but the first company that I bought this week or added into was my Card Factory position. So I increased my Card Factory position by quite a bit this week. The reason why I kind of added into this position is because it's actually my only UK company that's in the red. And the first thing I noticed going around about places is that the Card Factory was very busy, and it's the same thing I've heard from a lot of people, is the card factories are really busy. Now obviously they've been shut for quite a long period, but I think that whole rush in December will help it, and the amount of people that are going out and buying cards will still be pretty decent numbers. The other thing as well is the valuation side of it. You look at the company now, it's trading at a very cheap valuation. I think it's like 100 million market cap. And last year the company put in like 400 million pounds of revenue, which is crazy cheap. So yeah, I think that was another crazy thing. Obviously it probably won't be able to do that numbers because of COVID and how long it's been shut, but I think when you look at a valuation point of view, that stands out as being really cheap, that the revenue is more than the market cap by quite a bit as well. So that's another thing as why the company is so cheap. I think if it was still doing the profit that it did in 2019, this would actually right now be like I think it's like a 1.5 P ratio, a P ratio stock, which shows how cheap it is. Now I am treating this company as a bit more of like a turnaround play, so I'm thinking that the company's been sold off for so long that they're going to put a few things in place that will see this company do quite well. So obviously the sales will be decent, but there is some other reasons as well as that. So basically what Card Factory have done is they've launched a new Card Factory online store, and the sales were growing 70%, so I think that's quite good. Also launched another brand online which was Getting Personal, and their sales are growing quite huge as well. So I think when you put in them 2 online sales streams now, that's going to be another positive. And also there's been a management change, so there's a new CEO that's coming now, so hopefully they can help turn the things around in the company. I think this company's just been very badly managed over the last 3 years, and that's one negative on the company. But as well as having the new CEO coming in, what Card Factory have gone and done is they've increased the amount of stores they're in. So even though the main Card Factory stores have been shut over the lockdown period, what they've done is they've signed a big deal with Aldi that's been ramping up. So you think Aldi, they've been really busy, obviously one of the stores that have stayed open through the pandemic, so that's also going to help them through the card sale point of view when you think about the amount of Aldis that are out there. So I think having that new supplier and having that new amount of stores that add in already, that's going to really help them. As well as that, earlier in the year they signed a deal with the Reject Store. So the Reject Store is an Australian store which basically has, I think it's something like 300 stores in Australia. So you think about that now, there's 300 stores in a new country that they're going to be in, and then you add in the Aldi sales as well, and also the online sales. I think this company is well on the way of the turnaround plan in place, and it'll be interesting to see how good them Christmas sales are online, and with the Reject Store and with Aldi coming in, I think they will really help numbers, and I think there'll be a surprise there, especially when you look at how cheap the stock currently is as well. I think this company is well on its way of turning around, and I think the share price will reflect that in the next coming few months. So I thought that at the moment Card Factory definitely looks as one of the better plays in the UK stock market right now to me. Number 2 was a company that I wasn't really planning on buying, but it just dropped down a lot off its 52-week highs, or since the COVID highs. And yeah, it was Hollywood Bowl. So you guys know that I've talked about this company a lot on the channel. It's a company that I wanted to buy a lot more of a while ago until the vaccine news came out, and that sent it up quite a bit. But since it dropped off its 52-week highs, I was like, I wanted to add more shares into this one, and now that it's dropped 20%, I was like, this is probably the best opportunity I'm going to have. So I did increase my Hollywood Bowl position by a little bit. And out of all the companies I own, this is probably the one company that's really impressed me the most out of them all, just because of how well it's done to control the balance sheet. Also, the company's done really well previously. You know, you look at the growth and profit, it's a fantastically run company with new venues in the pipeline, which will help it going forward. But the really big thing stand out to me with Hollywood Bowl is when we were looking into the earnings report, and we could see that when it is open and it's running at these COVID capacities, it's still being able to pull out a profit in August and September. So it seems like to me, this is a big sign of a very profitable business without having to be at max capacity. So when you throw in, you know, when we start getting back to normal, which I think will probably be in about 3 months' time when this vaccine rollout gets a bit further in, we'll probably have another lockdown probably in that time as well. But I think at that time it will come a little bit back to normal. Obviously the warm weather will help as well. I think that Hollywood Bowl will be in a very good position, especially with how easy it is for it to make profit on a lot of these venues. And I thought, well, with it being on a 20% dip, I'll just take this opportunity just to increase my position a little bit more. Probably be the last time I'm able to buy a bit more shares in this company, but yeah, I took the opportunity to go increase this position because I do really like Hollywood Bowl, and it could quite easily, even though it's my third largest position, I've always said it could easily be my number one position. So yeah, I bought a little bit more into Hollywood Bowl. And the last company I bought was my brand new UK growth company, which is S4 Capital. So you guys know I started buying these shares in this company a few weeks ago. Bought quite lightly, and I was like, I'm just going to get in this company and see what happens, hope for a little bit of a dip. And sure enough, the company dipped a little bit more, so I was like, right, I can go and increase my position. And I bought once during Monday, and then it went down a little bit more, so then I bought again. So I actually bought this company twice really on Monday and increased my position 20% both times. So it's starting to build into a very nice position already in my portfolio. The dips worked out really well. Since I started buying, the stock has come back a little bit now. It's getting close to my break-even prices where I bought in, but I just wanted to get involved in this company because it's probably one of the most attractive growth companies on the UK stock market in my opinion. Obviously it's a marketing company, but it has very great customers that you've probably all heard of. As well as that, it's got a fantastic balance sheet on the company as well. And when you look at the growth to the valuation, sure, the valuation's quite rich, but when you consider we don't have many UK growth companies, and it's the P of like, I think it was 60 or something, that's quite cheap for a growth company in the UK side of it. And when you look at the growth and like the revenue is like 50% growth, the profit's growing huge as well, that P is just going to drop very quickly year after year. And when you look at the valuation actually compared to the revenue side of it, you're like, actually, when you look at the growth, not much growth is actually priced in. Sure, at these sort of prices, it seems a little bit expensive, but when you consider 50% growth on revenue over the next like 2 to 5 years, the valuation actually isn't that bad. So I was thought this is probably one of the most attractive valuations for a growth company on the UK side that I have seen out there. So yeah, I took the opportunity to buy this S4 Capital twice in the dip that happened this week. So those were the 3 UK companies that I did buy this week. I'm very happy with all 3 purchases, and like I say, I did buy 1 US company, and I'll probably reveal that in a little bit. But that's the video for today guys. Hope you enjoyed it. If you smash the like button, that's absolutely amazing. If you are new, make sure to subscribe, and I'll see you next video.